Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Reviewing the weekly price action, you can see the market holds to two strong bullish weeks and at present still focusing on that level of 75.25.35 after earlier breaking above the level of 74.20.40 area. In light of the daily pattern, however, the market is struggling at these highs. In view of the pattern, in regards to how far the rally has extended since the long-legged doji that was posted back here in mid-March, is that we could see the market slowly tumble back, that is towards 74.45 with the base. I believe that comes in now at 73.60.80 and reassess from there. The euro still holds to a relatively weak tone after overnight's price action. The market is getting a little bit on the jittery side due to the recent rise in oil, and the fact is the inflationary pressures still continue. With that being said, though, the market still respected that topside level of 110.90 to 111.15, and from there the market now focuses on the support level of 109.60, which I feel will eventually give way and then look down towards 109.30 and reassess. The dollar yen still nudging towards those 5-year highs around that 121 level. In light of the pattern, it is extremely overbought and now in turns views a potential downturn. If seen, then we could see the market drop back towards the support level, seen somewhere around 120.70 and then down towards 120.20 and reassess from there. The price action for sterling was a little bit on the jittery side after the UK CPI number came out yesterday, higher than previous month of 5.5 to 6.2. The PPI number came out at 1.4. Nevertheless, from the recent rejection from that top side around 133.15, I'm not going to get negative yet. I do like the way this structure is, and therefore this is just a short pause profit taking, and then may see another test to that top side around 132.45 to 133.15. Disappointing to the bulls, that is, that they didn't defend the level of 190, and from the break overnight still shows bullish divergence. I'm not going to get negative because we can still see a snap and a big rally, that is, up towards the region of 191.40 to 192. And while this pattern holds, I think it's just a one-off break that could be seen as a recapture to that top side and catch the bears off guard. The market is now pressuring that top side resistance for gold at 1,948 to 54 after surging overnight and breaking the midway point. Now a close above 54 would leave me neutral. However, let's see how the market plays because it did reject this level and it may do so again. Wrapping up with oil, the market, as I mentioned yesterday, I didn't have a view, but for those wanting to trade, well, we're at the target of 116. I'm reassessing from there because if you still want to continue to trade, because I'd rather sit out because the market's too volatile in terms of risk, and the fact is, therefore, could see a move up to 119 and reassess if we see a break of 116. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day.